One big beautiful bill impacts student loans and education aid. Here are the detailed notes. Assets excluded from educational assistance calculations have been expanded. It now includes a family farm if the family resides there, a small business with not more than 100 full-time employees or equivalent that is owned and controlled by the family, and commercial fishing business and related expenses, including fishing vessels and permits owned and controlled by the family. These new exclusions to asset calculations will go into effect July 1st, 2026. Beyond assets, there are changes to federal loans. Specifically, 1. It terminates the eligibility of graduate or professional students for federal direct plus loans starting July 1st, 2026. 2. It sunsets the current defined cap limits for federal direct, unsubsidized Stafford loans for graduate or professional students starting June 30th, 2026. 3. It replaces that cap limit with a new cap policy. Annual loan limits are set at $20,500 for graduate students who are not professional students, and $50,000 for professional students. Aggregate lifetime limits are as follows: $100,000 for graduate students who have never been a professional student, $200,000 for graduate students who are professional students, as well as for professional students who have not been graduate students. Finally, for professional students who also have been graduate students, $200,000 minus the amount the student has already borrowed for programs of study. 4. A new cap policy is defined for federal direct plus loans for parent borrowers starting July 1st, 2026. Annual limit is set to $20,000 by all parents per dependent. Aggregate limit is set to $65,000 by all parents per dependent. 5. Defines the maximum aggregate amount of loans that all students may borrow shall be $257,500 with the exception of federal direct plus loan specifically to parents for their dependent student. 6. Students enrolled less than full-time will have their annual loan eligibility proportionally reduced based on their enrollment level. Additionally, beginning July 1st, 2026, institutions may impose their own loan limits on both student and parent borrowing for any program of study so long as the limits are applied consistently to all students within that program. Note, changes 1 through 5 do not apply to students who, as of June 30th, 2026, are enrolled in a program of study at an institution of higher education and have received a federal student loan or had one borrowed on their behalf. The exemption lasts for either 3 years or until their expected graduation, whichever comes first. This covers 2 sections of the 14 sections outlining changes to education aid and student loans. Be sure to keep a lookout for our breakdown videos of the other sections. Follow Newt for clear, fact-based legislation breakdowns.